Okay, here we go. Hope you like my new home studio. Took me 5 hours to put this together with the lights changing all over the place. Bloody nightmare. Right, today I'm going to put myself on the Forex market hotspot. Basically, over the next 10 minutes or so, I'm going to answer as many questions as I can about the Forex market. Everything that you need to know, like your one-stop shop. So what is the Forex market? First up, okay, often referred to as foreign exchange, or you may have heard it called the currency market, or just plain FX. It's basically the trading of one country's currency against that of another, in the hope, of course, of making a profit. Now, the chances are you've actually traded the Forex market in the past. If you've ever gone on an overseas holiday, chances are you've exchanged the currency from the country in which you live into the currency of the country in which you are traveling to. This is a form of a currency transaction. In fact, there are $7 trillion a day going through the currency markets. That is part of that number that you've heard branded all over the place. Now, let's assume you live here in the UK. You want to exchange, say, 1,000 British pounds into US dollars for your US trip. At exchange rate of an example of, say, 1.3. You'd get clearly $1,300. Now let's assume that my flight was cancelled because the pilots went on strike again. Yes, it has been known. So the holiday was cancelled. So I now need to change my dollars that I bought back into pounds. But now the exchange rate has moved. It's moved to 1.20. My $1,300 now would be able to buy more pounds. In fact, £1,083. So I've made an £83 profit because the exchange rate moved. So the Forex market is now available to the retail traders to speculate on these moves in the market, and that's exactly what the Forex market is. Now, the Forex market is known as an OTC. That's like over the counter. Basically, there's no centralized exchange like a big exchange building where you go and do your transactions. So banks all over the world, they offer their prices for themselves and indeed their clients into this big exchange. It's called an ECN. It stands for Electronic Communications Network. And our brokers now allow us to participate in this market by offering us prices that we can also buy and sell on. Now, the other notable thing about the Forex market, very appealing, is that it's open now 24 hours a day. But just because it's open 24 hours a day, I don't think you should be trading 24 hours a day. Fatigue will kick in. Now, the most actively traded currency pairs out there all have the US dollar on one side. In fact, 88% of all FX transactions have the US dollar on one side. Now, the other main countries around the world that traded against the US dollar, this would make up a major. So every major pair has the US dollar on one side. Now, the other currency pairs, for example, you might trade the Swiss against the yen, they'd be known as the minors. So one of the biggest questions I get asked all the time is, can you get rich by trading the Forex market? Can you give up your day job? Look at this. Here you go. We got $100 bills here. There's 10,000 there. Got another 10,000 there. That's another 10,000. That's basically $30,000. And I acquired this just this morning. And do you know how I did that? I bought them on Amazon for 20 bucks. This is fake money. Have a look. This is what you see on all these videos from the snake oil charlatans promising you the riches. Anyone that's showing you all these dollars spread out on a bear with their Rolex watches, this is basically absolute hogwash. It's absolute BS. Don't get sucked in. Yes, you can make money trading the Forex market, but it doesn't happen overnight. It doesn't happen to everyone, and it needs a lot of time, education, patience, and discipline, and of course, the know-how. So what is the minimum entry? Very good question. A lot of brokers will tell you you can start with a couple $100, $500, something very small, and they're absolutely right. The cost of entry into the Forex market is very minimal, but that doesn't mean you're going to make it rich with a small account size. Sure, you can learn to trade with a $200, $500 trading account, plugging away, but you ain't going to give up your day job with a $500 trading account. The cost of trading. Now, there's two transactions basically that you will experience when you're trading in the Forex market. First of all, you've got the spread. The spread is the difference between the buying price and the selling price. That is the broker's commission. Brokers will also charge potentially a commission on top. So there's two transaction charges that you need to be aware of when you're trading the Forex market. You've got the spread and of course the commission, and the market rates and the commission structure is widely advertised out there on the broker platforms as well for you to compare. So how much can you realistically make? Well, I would say to our members inside the trading room, if you can make say 4 or 5% in a month, that indeed is a fantastic return on investment if you consider compound interest. Remember Einstein? He said a lot in his time, didn't he, Albert Einstein? Apparently he also said this about compound interest: those that understand it earn it, and those that don't, they pay it. If you can make 4% each and every month on a trading account, that's basically around 79.5% a year. Tell me which hedge fund out there makes 79% a year on the investment. I tell you, not very many. So if you can make 4 or 5% a month, that is a good return on investment. So are you going to be able to return an income with 4 or 5% a month? Well, chances are most retail traders are starting with $1,000, $5,000, maybe say $10,000. If you're starting with $10,000 on a trading account and you make 4%, that's $400 in a month. Can you live on $400 a month? I know I certainly can't. It doesn't even pay my internet bill. But if you compound, and compound, that 4% soon returns almost 80% in a year. Now think about it. If you could show someone with money a track record where you're making 4% each and every month, money will follow money. They will be throwing money at you for you to invest. So why do most traders fail? I put it down to a number of reasons. First of all, I put it down to the fact that they've come into this with the wrong expectations. They've been told the yarn by the snake oil charlatan. This is the get-rich-quick scheme. It's not. Chances are they're fed up with their day job. They want to go and tell their boss to go and jump in a lake, and they think the Forex market is their answer. And they soon get the cold, hard awakening when they realise it's not quite like that. And when it's not quite like that, what do? They over-leverage. They take on bigger positions in order to achieve their unrealistic expectations. Another reason is they haven't got a plan. They haven't got a reason to enter a trade. They're just shooting from the hip, or they're following a tip sheet, or they're following someone else. And of course, when that goes wrong, they've got the wrong expectations. They've not got a plan. Everything comes tumbling down as well. And also risk. They don't consider risk. Everyone, when they're trading, should consider risk before they consider how much money they're going to be making on the trade. You wouldn't walk into a room with no exit doors with you, so why would you walk into a trade with no exit strategy either? You should always be considering risk on each and every trade. So how much should you be risking on each trade? We may have read in the books, people say 2% per trade, no more than that. I think that's too high. I think that you should be risking less than 1%. 0.5%. I risk 0.25% on my intraday trading. If you're looking to achieve a realistic return, 3 to 4% in a month, then why should you be risking 1 or 2% per trade? You have 5 losing trades on the bounce, you're down 10%. So I would suggest you risking no more than 1/4 or 0.5%, of course, depending on which strategy you are using. Yeah, the 3 pillars or 3 components that I think make up a successful trader are these. First of all, you've got the strategy. Strategy, the series of rules of entry, when to buy, when to sell. It can be learned, can be taught. Then you've got the risk management. Again, can be learned, can be taught. You need to know how much to risk, when to take profits, when to move stops, and so forth. And thirdly, and the most important and the most difficult to master, are the emotions, the psychology of it all. We know that we should trade without emotion. It's impossible. We're human beings, everyone's got emotion. So I say, look, you're not going to avoid the emotions. I've been trading for 33 years and I still have the emotions when it comes to trading. But what I've learned over the years is how to control my emotions, how to avoid situations where my emotions become heightened. So basically avoid the emotional circumstances where you know you're going to be vulnerable. Trend following or counter trend following. What should you do? Well, I've got strategies for both. I am an intraday trader on the trend. I like to see price continue in the direction of which they've come from. I believe in strength over weakness. If a particular currency is strong, I like to buy that currency. If a particular currency is weak, I like to sell that currency. I like to follow the trend. The trend is your friend, of course, until the bend at the end. So I believe as a rookie or beginner trader, you should look to follow trends. Counter trend basically is when the market's going against the trend or where the trend turns. We've got some great strategies. One of my most popular strategies is literally that, looking for these big turning points on the big trends, normally on the daily time frame, where we look at price action on the daily and of course sometimes the weekly as well. Scalp, intraday or swing. Scalping basically are traders that look to the lower time frame charts. Traders are looking to scalp out small profits multiple times a day. I think it's often highly emotional down there on the lower time frame charts. It suits some, doesn't suit others. But it can be great fun. Be careful if you're going into scalping that you're not looking just for the thrill factor. A lot of traders get caught up by that. Intraday trading, on the other hand, is when you're looking at the higher time frames, maybe the 1 hour, the 4 hour chart, possibly even the daily. You may have 2 or 3 trades a day. Now, swing trading, on the other hand, is looking at the longer term, the bigger picture on the daily and the weekly. A lot of it has to do with the emotions and the makeup of a person to decide whether they're going to be a swing, scalp or an intraday trade. Also, a lot to do with your personal circumstances. Do you have a day job? Are you able to spend 7 or 8 hours in front of the screens, or are you only able to spend, say, a few minutes at the end of the trading day? As I say, we've got strategies that cater for both as well. But it all depends really on your personal makeup and your personal circumstances. How important is backtesting? Backtesting is basically the process of going back over historical data to look to see how your strategy and your risk management parameters would have performed. I think backtesting is the most important process that all traders should undertake, no matter how experienced you are in trading. Backtesting has a number of advantages. Firstly, it will show you if your strategy is profitable, if it has an edge. But also help you to understand the losing characteristics of your strategy. All strategies have losing periods. If you've seen it happen in a backtest, you won't be alarmed or concerned when it happens in the future. And hopefully then you won't fall into that cycle of doom you may have seen me talk about in one of my earlier videos. Hopefully it's got over 1 million views at the moment. Hopefully you don't fall into that cycle of doom because you've done your back testing. You won't be switching and changing between strategies. Demo or live trading. Just for those that don't know, demo trading is basically when you are using play money. The broker will give you like a notional account with some money in it. Whatever you make or lose, it's not real money. It doesn't really matter. Where live trading clearly does matter. It's real money in your account. Losses are real, and so of course are the profits. Now, I think the two schools of thought about demo trading or live trading when you're starting out. I personally think that you should be starting out using a demo account, okay? And the reason why I think that is because if you're unable to trade with discipline and emotions on a demo account because it's demo, chances are you haven't got those emotions that you need to trade live money going forward. The other thing to think about is this. A lot of people say, you should trade live money because the emotions will be more real. But what people do, they drop in $100 or $200 or $300 into a trading account because it's real money, and then they start not getting the discipline they should get. It's only $300, $200, and what they end up doing is blowing account after account after account, small little accounts that soon end up as a big loss, and they end up ditching the whole trading mentality rather than carrying on. So trading with small accounts, I think $200 on real money is futile. I think you're much better off getting your strategy, back testing it, trading in the demo account and acting as if it was real money. If you haven't got the discipline to act as if it's real money, then you shouldn't be trading in the first place. Shall I follow signals? Look, following signals, in my opinion, will never make you rich. Sure, you may have some short-term gains, but the moment that signal provider has a string of losses, as we all do, you are going to begin to doubt him or her. And then you start looking for another. And imagine that signal provider were the nuts. The moment that he stops providing the signals, you are left high and dry. Look, you're far better off using a signal to learn how to trade. Learn how to trade for yourself. You've heard that expression, I'm sure, in the past. You give a man a fish, he's got food for the day. You give a man a rod, show him how to fish, he's got food for life. I think you get the idea. Sure we can. In fact, I've taught thousands of traders over the years. And are they all successful? No, they are not. Look, I can show you what you should be doing. I can point you in the right direction. I can show you about strategy. I can talk to you about risk management. I can hold your hand through the emotional side of things. But you know, I can give the exact same strategy to two different traders. One will be highly profitable and one will end up blowing account after account. Now, we've got lots of trading education inside our trading room, inside the trading lab. We put hundreds and hundreds of hours of videos together. We also stream live, as you know, around the clock. We're taking live trades. Everyone joins in. It's a great atmosphere, all taking live trades. If you're interested, as you know, you can always join up. I think there's a 7-day free trial as well. Just come over to ForexSignals.com to get involved. Do I trade with stops? Abso-blooming-lutely. You know, I would never suggest you trade without using stops, certainly when you're starting out. Now, I know there are some out there that don't, but the chances are, if they're successful, they are experienced and have some advanced exit strategies that they have mastered. But I would say when you're starting out in trading, yes, absolutely, make sure you employ stops. You know the maximum risk that you have deployed at that moment on that trade. And that way you're hoping, or you're halfway there to taking the emotions away from trading. Once you've accepted the risk, you placed your stop, you can forget about the trade. Yeah, great question. I often see this branded all over the place. 95% of retail traders fail in the Forex market. Why is that? Well, I put it down to three main reasons. First of all, wrong expectations. They've come in expecting the world. They want to tell their boss to jump in that lake. They hate their job. This is going to change their lives. So they come in, they start trading, they realize it's not like that. They over leverage and they end up blowing accounts and they give up on the dream. No plan and no strategy. Basically, that results in the cycle of doom. You've got to have a back-tested strategy and you've got to have a trading plan. If you don't, chances are you'll end up in that cycle of doom. You'll start trading it, it won't work, then you'll ditch it, find another strategy, tweak it, change it, ditch it, tweak it. The cycle of doom, you get the picture. You can watch my video, as I say, on that in the past. And of course, no risk control. You'd never walk into a room without knowing where the exit door is. Why walk into a trade without knowing where you're going to get out of a trade? You've got to have proper risk control, sound risk control, and not bet the farm on each and every trade. Again, a lot of that is to do with the wrong expectations when you come in the first place. So here are my top 5 tips for you to follow in order to become successful in the Forex market, or give yourself half a chance at least. First of all, have realistic expectations. You know, don't come into this thinking you're going to make tens of thousands of dollars on a $500 trading account from the get-go. Be realistic. Then you need to develop or decide on a strategy, a series of rules, the reasons why you're entering, the reasons why you're exiting. Don't just shoot from the hip hoping the next trade is going to be the big winner. So once you've got the expectations right, once you've got your strategy, then you need to back test it. You need to back test the hell out of it so you've got the confidence in that strategy going forward. You know how it performs, you know the edge, and you know what it's likely to do in the future, in good times and bad times, so nothing is going to surprise you. Once you've done all those three, do what I call the 25 trade challenge. This is basically getting the strategy and trading it without fail 25 times on the bounce. Don't deviate from it. Don't ditch it the moment it starts losing. Don't get bored of it. Don't start changing the rules because it's not working according to the backtest. Trade it for 25 times. I bet you can't do it. Most people can't do it. Most people can't do it 10 times, let alone 25 times. I challenge you to do the 25 trade challenge on a back-tested strategy. And keep a journal. Keep a track of every trade that you do. Write down why you entered the trade, what your feelings were at the time. You can do this on an Excel spreadsheet if you're computer minded. You can do it on a good old-fashioned pen and paper. But keep a journal detailing each and every trade. What happened? Did it hit profit target? Did it hit stop loss? What happened in between? Were there big events that made something happen? So you can basically monitor the trades. Keeping a journal is very important. I promised you 5 tips. I'm actually going to give you 6. Surround yourself with like-minded people. Often said in this world, if you want to be successful, then surround yourself with people that are successful. We've got a vibrant community of traders, mentors here at ForexSignals.com. Come over and surround yourself. We're talking trading all day long. It is a fun place to be. You will learn a lot. So I encourage you to come over there. Give it a try anyway. It's a 7-day trial if you want to experience it. Come on, let's go and make some coffee. In fact, I'm going to go and buy a coffee. Got my coffee, didn't have to pay for it in the end, it was free, just as well, because it's fake money anyway. Don't get sucked in by all that rubbish. If you like my video, give me a thumbs up. If you didn't, give me a thumbs down. Do leave a comment. I get back to each and every one of them. If you want to follow us on Instagram, you can do. Follow us on Twitter. And of course, if you follow us on Facebook, you can tune in live every Monday afternoon, 2 p.m. London time, for a live event where we stream discussing market opportunities for the week ahead. Till the next video, happy trading and good luck.